guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the gold futures chart. Gold currently finds itself trading at 1988. We did earlier on have a move up towards 2000, but we have since pulled back from that price area. It was only yesterday when I discussed my cautiousness with regard to the gold markets. You know, it's clear from a technical perspective we're now trading in this upwards sloping flag pattern. Of course, we've had this very aggressive move higher since the beginning of March, and as you can see from my drawings here, we are forming this upward sloping flag pattern, and this is typically a bearish sign. It doesn't mean that we're going to go and break down to, you know, new yearly lows. That's not what I'm trying to indicate, but it does typically signal a move lower. Perhaps we go and test a 50-day EMA, which is at 1950, and if we broke below that, I think we could potentially even go down to 1900. I do think that these are areas which would be bought. It's interesting to see, you know, if we zoom out, we could potentially be in the process of forming a cup and handle pattern where we perhaps got towards 2070. We formed this, or 2050. That's where we traded the other day, and then we form this pullback to, let's say, the 1950 area, and then eventually we do get that breakout. Because medium to longer term, I am really bullish on the precious metals. I was just mentioning over it in my silver video, the current macro environment that we find ourselves trading in. You know, we've seen the Fed hike interest rates at the most aggressive rate ever seen, and this, of course, has had consequences, and we've seen that recently with regards to Silicon Valley Bank, and we're now starting to see some parts of a system crack and break even, and this is now going to force the Fed to eventually come out and announce a Fed pivot, because they can't continue to hike interest rates in the face of what's been happening in the banking sector, for example. And who knows, there might still be other areas in the US economy, in the global economy, which haven't cracked yet but are going to. So the Fed is going to kind of force their own hand into a pivot. And the problem is, guys, is that we still have inflation, CPI and core inflation, still at very high levels. Yes, we have come down significantly since the peak readings, but we still have inflation way above the Fed's target of 2%. Well, I think inflation right now currently trades around 5%. So this is going to be a big problem, because let's say if the Fed comes out next week during their FOMC meeting, announces that their job is done, and that they're very happy with the current Fed funds rate. And then the week afterwards, we have the CPI reading in May, which shows an uptick in inflation. Well, then all of a sudden, we're going to be in a very sticky situation. And I feel like that is going to be an environment where the likes of gold and silver thrive, because it's going to be a safe haven. You know, that announcement from the Fed, backed up by a uptick in inflation, you're going to see investors sell their equities and flee to safe havens. So I really do like the setup here in these precious metal markets. It's not to say that we could potentially have a short-term pullback here, but that just creates value and a fantastic buying opportunity. So I like the medium to longer term projections here for gold. I do believe that we are about to break out of an area where we've struggled to break above, dating all the way back to August 2020, and that is 2070. I think that we could be on the cusp of breakout up towards 2,500. If you'd like to copy my existing trade that I have open here in the gold markets, then please do not hesitate to scan this QR code on your screen. It will take you to my website, where you can then subscribe to my trading signal group.